Okay, so I'm back with another video. Hope you're enjoying the content I'm putting out at the moment. And right now we've got the pound USD 15-minute chart. So just wanted to go over this GBPUSD trade that I made a profit of $3,000 on FTMO. So this is the trade itself, with entry, stop loss and take profit. The profit is in the thumbnail as well, but I'll also drop it in somewhere throughout the video so you can see it on the MT4. But anyway, I just wanted to go over it, so the sort of analysis behind it just quickly. So at New York session we formed this strong level of resistance. As you can see, no body closures below the level. So that to me indicated a strong level that once broken would form a nice supply zone for us to look for a trade from. So towards the back end of New York, coming into Asian session, we broke this level, as you can see, breaker structure marked in, and we had a huge bearish sell-off to the downside, which was obviously good confirmation that this candle right here is where that move originated from. So that is why I've marked out as my supply, and we are now just waiting for price to try and react, come back to this level and react. So we had some consolidation and what I like to call intermittent term highs. So these are both intermittent term highs, so that's an ITC concept. So basically price comes in and fills the fair value gap, fills it, and it means that price is likely to continue on up and break these intermittent term highs. We then filled this fair value gap on the way up, which is another confirmation for a bullish move. So we knew price was on our way to the supply, we just needed to see how it reacted at the supply. My entry confirmation is just to have the limit set at the open of the supply area, and the stop loss I either have above the supply or I have it above buy side liquidity or sell side liquidity if I'm buying. So yeah, if I'm selling, I'll have my stop loss above buy side liquidity, and if I'm buying, I'll have my stop loss below sell side liquidity and above buy side liquidity. So this was the obvious previous structure point that I was putting my stop based on. So I had this buy side liquidity and this buy side liquidity to hold the trade. So we entered, we had a bit of drawdown, but I mean it wasn't excessive off this bullish candle, and then another good confirmation that kept me sort of happy with the entry in the trade was we had a huge bearish candle which actually engulfed the bullish candle. So that was obviously a good confirmation. So yeah, this bearish candle engulfed the bullish engulfing on the way up, so that was strong confirmation. Then we had lots of wicking, which is just mitigation on the lower time frames. That's how I see it. So obviously on the lower time frames you'd see, if we go to the 1 minute for example, where are we going to be? Where are we? I hate doing this because then it loses where I was. Not there. Here. So about that. So as you can see, we come into the 15-minute supply. So and price makes the high point, which would be our protected high. So this is our protected high within the supply, and then drops down, and that would be your change of character here, because as you know, on the higher time frame, that is the so we've had our change of character here from the 15-minute low of, that's the low of the 15-minute candle. So change of character, we then retrace, and we have a breaker structure towards the downside. So for us here, this is communicating to me that the algorithm of price is beginning to form bearish trend, and we're still not breaking our protected high, so that's good. And all I see here is, as I was saying when we were on the 15-minute, is this is all these wicks, and this is just mitigation. So you've got sellers here, as I'm a seller here, so you have liquidity built from these sellers. As you can see, sales have occurred from this level, tapping back into this level here, but then prices come up, and these wicks have obviously mitigated the early sellers. You then have again another bearish move, people think they're in, roll stops, and mitigated again. Then we have another breaker structure to the downside here. So we're still bearish at this point because our protected high is still being held. So breaker structure, then we come back up. That could have been a lower time frame entry. So you had your breaker structure, where that move originated from. Originated from here. And you could have had your entry there, for example. But then even then, this is smart money. And then you've got people who would have been stopped out here, where they've moved their stop to break even early and trying to protect their capital, and they would have got stopped out. And then look what happens, the actual move occurs that made us the profit, made us the 3% or 2.96%. So there's a lot within the lower time frames. You just want to try and make sure that you're trading from a higher time frame zone when you're on the lower time frames. So yeah, you want to make sure that you've got a higher time frame area that you're actually trading within, and then once price comes into that area, like we've had price come into our 15-minute area, you can either have your limit set at the open of that supply or demand that you're trading from, like I did in this trade, for example. But sometimes if you've not picked the correct area, then price will just smash through it, and you'll get invalidated, and you'll get a stop loss and lose 1% or whatever. But in our term, this was a valid area. But if you wanted to be safer, then you would not enter here when it comes into the zone, and you do sort of what I've just spoke through, and you'd wait for the rejection, the change of character. You'd mark out your protected high or protected low, and then you'd wait and you'd mark out the liquidity and where it's sitting, and the breaks of structure and price mitigating the liquidity, and you'd wait for something like this to come in where you see a breaker structure or a couple breaks of structure where that move originated from here, and then you would be able to go onto the lower time frames, and you could have an entry like this with your stop loss, say below this pH, and then you see what I'm getting at? You're getting a refined entry on the lower time frames. But this is another thing, you need to have the time to be able to sit and monitor and watch when price enters your zone. If you don't, which sometimes I don't, that's why I mark it out and then just leave it and let it happen. But then, for example, that could have been a trade within the smaller time frames, a compounded entry off of the larger trade. For me, that's what I see. So Obviously, yes, I understand people will think, oh well, price has already played out, you can see what's happened and you know that's a good entry. But I'm just saying that that could be your trade, and it's not, it follows the same rules I'm following for the bigger picture as it does for the smaller picture. So I would be able to see this if price was playing out anyway, because you can see that this is the supply that's broke the structure. And yes, people might say, oh well, this candle broke that structure. Yeah, it sort of did, but then this, you always want to go for your most extreme POI. So in our case, this is the most extreme POI, not here. So that's how it works. That's what's going to get you the best overall success. So here, and then you'd again enter at the open, because this is on the lower time frames, and your stop loss would be above the previous high. Take profit. My take profit was set get rid of that. My take profit was set at this sell side liquidity here, so it's easier to see on the higher time frame. This sell side liquidity marked here was where I set my take profit at. I could have extended it to here, but as I've said in previous videos, I don't like to always target the extremes, because sometimes price doesn't respect them, whereas in this case I could have milked this trade for a lot more than I did, because we had a huge sell-off with Boris Johnson leaving office at the point of this trade. That was the news that was sort of in the headlines, that the new Prime Minister debates. So yeah, I could have held this for a swing really and held it all the way. So, but I didn't. I just come out, grabbed my 3%, my 3,000, and ran with it. But yeah, I hope that makes sense to you guys, and I hope that's a good breakdown of this trade and what I saw and understood from it. And yeah, I'll be definitely making more videos and continuing the consistency. So it's obviously appreciated, the watch time, the likes and subscribers, and sharing my videos around to other people that may be interested or be able to learn something from them. And again, if you really do have anything you want me to go over or try and do, then please drop a comment below and sort of give me what you'd want to see, because I'm trying to grow the channel, and obviously any support at all or feedback really does help. So yeah, I just hope you guys have a good rest of your day, and I'll see you in the next video then. Cheers.